First of all, it is nice to have you here in person.
It's unbelievable. I hear that I'm the third person to come on set, and so I'm very honored. And I think it speaks volumes to how we're, changed, particularly from if we were having this interview a year ago, I'd be on a Zoom.
Without a doubt, you'd be remote. But Bill, I do, we've covered it very closely, the return to office, because it's an enormous story in and of itself for corporate America. And it still remains very much unclear what percentage of people are going to return once we are really back to normal. What is your sense as to the new normal? Because it doesn't feel like it's ever going to be 2019 again.
Well, it's hard to say where we're going to go, but all I do know is we look at our stats. So we look at where we are today. Most buildings are over 50%, and our portfolio, and it probably tracks pretty well in other owners. Some buildings, believe it or not, are in the 70 or 80%. Some are low. Depends on each company and what their requirements are. You mentioned Google starting next month, early next month. Everybody's back, so it's over 12. Probably 10,000 to 12,000 employees. Very important sign.
Yeah, they're back, but they're not back 5 days a week.
They are not back five days a week, but some companies are, and I think we have never been in this position before. And we've had these type of discussions back in after the dot-com bubble, after 9/11, after Sandy. I sat outside being interviewed by one of your former colleagues. Nobody's ever coming back to work. Nobody's coming downtown. Nobody's going to go on a skyscraper. And we've resolved our way through these things. Do we have to do different things for the buildings? The answer is yes. Most owners who have the wherewithal and the capital are putting in amenities. They're putting in more hospitality-focused bars and wellness centers and conference centers to incentivize people to come back to work. And where that goes, we're not sure, but we're definitely seeing more activity. And also, if a year ago we were sitting here, we'd be having a discussion about the residential market, and I would be brutally honest and say very nervous, very scared where we were. We were at 85%. Today we're at 97% occupancy.
Yeah, I want to talk to you more about residential because the bifurcation, though, is a significant one. Obviously, you have both residential and commercial. We don't know where it's going to end up. I would argue some of those comparisons you made, it's different now. I mean, remote work is here to stay.
Yes, no
question
about it.
There's a level of flexibility employees are demanding from their employers that was never the case. And so, it's not clear to me. When you think about your space, I mean, do you see any repurposing at some point down the road? Or, in particular for those perhaps lower class office buildings that still are plenty of them around in New York City?
There's no question there's a bifurcation between Class A and Class B. We have been to this party before, right here in this neighborhood. Back in the 90s, 30 million feet of vacant space out of 130%. So we work with the mayor and the governor and the state, and we came up with the downtown plan, which was in the early 90s. And voila, we went from 10,000 people living in Lower Manhattan to today, 70,000 people living in Lower Manhattan. So that brings restaurants, it brings retail, it brings, you walk out, you see the kids and the strollers and the scooters and the dogs. And my wife and I took our granddaughter to the new Battery Play Space right around the corner on Sunday. It was a beautiful afternoon, packed. Then we went to Washington Square Park to see our other grandkids, packed. And so
I'm glad you're seeing the grandkids. That's good.
Definitely grandkids. But on the commercial side, and so the mayor and the governor, we think we're working very well together, have both talked about using this downtown model of conversion to look at other buildings in the city that are obsolete and that are that can, if they physically can, be converted. That we have a tremendous housing shortage. We need additional product. So how do we do that? You need incentives. You need the zoning changes. So it's a public-private partnership. I believe that if those pieces can be put together, you will see that same trend happening. And then just in general on the commercial side, you're seeing deals done. That's my data point. So Hermes takes 80,000 feet at 550 Madison. Estee Lauder renews and expands in Lower Broadway. Morgan Stanley takes 400,000 feet on Park Avenue Plaza. So Alpha Signs takes Alpha Sites.
Sorry,
100 Park Avenue just took 300,000 feet. A company called Bentex. Now, then you're also layering on crypto crypto companies. They've taken about 500,000 feet this last year. We signed a 10,000 feet a foot tenant with a company called Epiphany, 3 or 4 other companies. Then you have life science. So what New York has always done is adapt. And what's our strength is our diversity of talent and people, the ability to access capital, the human capital as well as the financial capital. And we are going to build off of that. Tough 2 years, no question about it. And we'll have bumps along the way, external events happening around the world.
Got to get Carl in here for a
But do you think, I just wonder what you make of NBA games, TSA throughput, open table, box office. People are doing stuff, but castle throughput, office, basically card swipes, are still stuck in the 30s. Maybe the only thing that's going to fix it is if the labor market loosens up, right?
Well, you also, I mean, yesterday came out with, the job requirements. People, how many jobs are out there? I think it was 13 million jobs. So those, and also, to me, it ties in, yes, people are coming back. They moved back from Florida. Everybody said they're never coming back. They're back.
Well, I mean, a lot of the financial services industry, not a lot, but plenty of hedge funds have moved to Florida. Plenty of big earners have moved to Florida, Bill.
But some of them...
I make phone calls now, and I'm getting people in Florida when I never would have. And so are you.
Yes, but you were also getting, as I said before, infill of companies like crypto or life science or technology. Google just bought their building for over $1 billion. And they are, to me, the fact that these companies are taking space, they're looking over the horizon. Why are they taking space? They're not taking it because people are not coming back to work. They're anticipating the people come back to work. It's going to take a little time. But again, as I said a year ago, what I've said to you now, back then that we'd be at 90% occupancy? No way. There was no way to predict residential.
Well, let's talk a bit more about residential, because that is interesting in the sense of we're back to where we were basically in 2019.
Correct.
In terms of even rents. Who are all these people? I mean, they really love garbage, huh? Scaffolding.
No, come on. You've had the mayor on last week.
We did. I'm glad you saw that.
And you guys asked him the right questions, and he answered the correct way. Quality of life, crime, subways. He knows how to reach out to people in the business community, people who have lived in the city for 50 years. He, I think, is a man of the people. He wants to get the city.
You think he's going to get it? He's going to get it moving in the right direction.
I believe he's going to get it moving in the right direction, and he understands what it's going to take. And he spoke to Goldman Sachs the other day. He's encouraging people to come back to work. And I
know, but he's saying you got to come back because somebody else's job. He's sort of. It's not clear that it's going to work.
Right, but also the message is if you're pitching XYZ company and you're pitching XYZ and your team's in the office and collaborating, working together, and you're on Zoom and you win, you're going to start saying, well, what was the secret sauce? And the secret sauce always is connectivity, people together, pitching ideas, having that beer afterwards or whatever your cocktail is.
You're preaching to the converted here. We're believers in that. Meanwhile, finally, though, what's it going to mean for rent? I mean, in terms of your commercial tenants, how bad is it? Is the worst over?
I would say we're heading into the point where we're starting to see deals. I heard this last night where a tenant had a lease out for a year. Then all of a sudden, somebody else came along and took their space. That other tenant's now going to look for other space. They never signed the lease, COVID, whatever. And so for the high-quality, amenitized buildings that we just made a deal in Times Square with a different type of user. It's a college, Touro College. They took the base of the building. We built a separate entrance. And then the rest of the building, we're going to rent out to financial service, tech firms. We have fully amenitized. So if you're for a tenant, today's a good time to be in the marketplace. You're getting very good deals. I don't know how long does that last. Is it 6 months? Is it a year? But we're seeing deals done. In February and January, you had over 4 million feet of leases signed with key tenants. There are other large deals out in the marketplace that are in negotiation that are going to get done. And I think,
Bill, finally, because we do have to go, though, this idea of conversions can be very expensive. And a lot of what you're talking about is now kind of 1960s era, buildings that aren't as easy to convert. Because there's not as much light and space that comes into them. You really think that that's viable?
It is viable with the right regulatory structure, and we've proven it downtown. A lot of the same characteristics for the buildings right around.
Yeah, although these are old. Some of these are much older.
Some are built in the 60s.
Yeah.
I've seen you go on Water Street. They're 1930s buildings and 1970s buildings. So it depends, yes, and it's not an easy task, and we're going to have to come up with the right structure, financial structure, and tax abatements, provide affordable housing. It's very key for the growth of our city, and we'll get it done, as we've always done.
Yes, the ever-optimistic Bill Rudin. He's been right, though. Been right
Realistic,
to be optimistic.
yes, thank you.
Okay. Thank you for being here.
Okay, good to see you.
Nice to see you.
Thanks, guys.
As a former Lower Manhattan resident, the transformation down there over the last 20 years has been incredible, I have to say. As we head to break, take a look at cryptocurrencies. Bitcoin falling back below 40K with all the major cryptocurrency assets under pressure this morning. You can track all the action on CNBC.
Shepard Smith here. Thanks for watching CNBC on YouTube.